Good afternoon everyone, this is Niall at learntotradethemarket.com. This is just a very quick video on crude oil. I want to demonstrate a very profitable setup with a high expectancy that you should all look out for in the future when you're trading commodities, currencies, futures, etc. This one I like to call the Fakey setup. I've been through it a couple of times. It's one of my favorite setups. So without further ado, let's have a look at it. This little formation here, this inside bar structure, okay, we've had an outside bar and an inside bar, meaning the second bar is inside the first bar's trading range, and that sets the signal up. And it doesn't matter what direction the trend is in, if we see a break above the highs or lows of this inside bar structure, we immediately need to have a look at what's going on and decide whether we want to take the trend trade, which is to break higher, or do we want to wait for a failure and take a short trade as everyone stops out below these lows. So I'll be honest, I didn't really see this formation as a profitable long setup. Reason being, we had these upper and lower shadows, these almost gravestone dojis is the traditional Japanese candlestick pattern. Now I'm not too concerned with most Japanese candlestick patterns, but this one is quite interesting because it's an inside bar and it's got this very volatile indecision look to it. It could signal a top in the market. I didn't like the look of that, and I know it's in hindsight, but I wouldn't have taken this trade purely and simply because of the fact that there was shadows on the high and lows of these tall candles. So once we saw the break, once we've seen the breakout to higher prices, what do we do then? Well, we don't usually sit around and wait. We just place a line on the chart, like so. If I just put a line here, I have an alert set when the market is looking to fail lower. So I would have probably entered sooner than the break of those lows, because there's signals on the hourly charts as well. But just if you're trading off a raw price chart, the termination of the trend was a break below the lows of this inside bar structure. So we had a fake breakout and then a move back below the lows. That's called the Fakey setup. Now there's so many ways to look at the market, and this is just one way to identify either a trend exit. So if you're long, you exit as the trend breaks back lower, or you can take a short trade. The reason the short trade comes off so profitably is because so many people are still long and have gone long, and they have to liquidate their position. And this trade made over $7 per contract, and that's huge. I mean, that's 7% of a commodity. That's that's $50,000 profit on, say, a $6,000 risk. So the idea is to be looking for really high probability trades, and this is one of them you need to be looking out for. If there's any questions, please post in the forum, and feel free to send me an email. I'll just type that up on screen now. If you'd like to contact me, my email is maverick.trading@bigpond.com. I'm going to make that a little bit bigger so you can see it. There's my email. So if you want to contact me with a question, shoot me through an email and I'll endeavour to get back to you as soon as possible. Or you can just post a question in the forum. There's other members participating now. Thank you all for your contributions. Any questions, there's a couple of other guys that I know that'd be happy to answer as well. So there's a couple of people in the community that are very, very astute at trading, and don't hesitate to talk with them as well. We'll see you next time, and that's the Fakey setup. Take care.